Here's a brutal truth. 95% of investors lose money. That's not a clickbait number. It's reality. Think about it. For every 20 people who put their money into stocks, crypto, or real estate, only one consistently comes out on top. Why? Are the rich just luckier? Do they have some secret playbook we don't? The truth is far more shocking, and once you understand it, you'll see why most people are doomed from the start, while a small group quietly builds wealth. Stick with me, because in this video I'm breaking down the real reasons 95% fail, principles the top 5% use to win. Section 1. The harsh reality. Let's get real. Most people enter the world of investing with the wrong mindset. They see flashy cars on Instagram, hear about overnight crypto millionaires, or watch some TikTok guru promise 10x returns. So they throw in their savings and then wonder why everything crashes. Here's the truth. The market isn't a slot machine. It's a transfer of wealth from the impatient to the patient. Mistake number 1. Chasing hype. Let's start with the biggest trap. Chasing hype. Picture this. It's 2021. Everyone's talking about GameStop, a stock that traded under $20. Suddenly shoots up to $400 because of Reddit hype. Your neighbor, your cousin, even your barber is saying, "Bro, you gotta buy this stock." You feel the FOMO. So you buy. But by then, the insiders and early players are already cashing out. And guess what happens? Next, the stock crashes. That's how the majority lose. They buy at the top when it feels safe and sell at the bottom when fear takes over. The 5%, though, they don't chase trends. They study fundamentals. They ask, does this company actually make money? Is this asset worth the hype? And most importantly, they wait because they know money flows from those who rush to those who wait. Mistake number 2, no strategy. Here's another brutal truth. Most investors don't even have a plan. Ask the average person why they bought a stock, and you'll hear things like, well, it was going up, or my friend recommended it, or I saw it trending on Twitter. That's not investing. That's gambling. The top 5%, they treat investing like a business. They know exactly when they'll buy, when they'll sell, and under what conditions. Some are value investors, hunting for underpriced gems. Some are dividend investors, building passive income streams. Others follow technical trends, using strict rules for entries and exits. But no matter the style, they all share one thing, a clear system. Without a system, you're just throwing darts blindfolded and hoping one sticks. Spoiler, it usually doesn't. Mistake number 3, emotional decisions. Let's talk about emotions. Fear and greed. These two emotions are why 95% of investors stay broke. When the market crashes, fear takes over. People panic sell, locking in losses. When prices rise, greed takes over. They FOMO buy at the top. Sound familiar? There's even a study showing the average retail investor underperforms the actual stock market by a huge margin, simply because they buy high and sell low. The 5%, they flip the script. They stay calm in chaos. They buy when blood is in the streets. They wait patiently when everyone else is rushing. Look at 2008. During the financial crash, people dumped stocks out of fear. But the 5%, people, like Warren Buffett, saw opportunity. They bought solid companies at bargain prices. And when the market recovered, they became even wealthier. The lesson? The market doesn't reward emotion, it punishes it. Mistake number 4, lack of education. Here's a question. Would you ever try to fly a plane after watching one YouTube tutorial? Of course not. You'd crash immediately. But that's exactly how most people approach investing. They think, I'll just watch a couple videos, maybe read a tweet thread, and boom, I'm ready to beat Wall Street. That's why they lose. The 5% don't treat investing as a game. They treat it as a skill. They read books. They study past crashes. They learn how to analyze businesses. They practice. They make mistakes, but they learn from them. In other words, they respect the craft. Because investing isn't about being a genius, it's about being prepared. And most people simply aren't. Think of it like building a house. The 95% build on sand, hoping the storm won't come. The 5% build on concrete, knowing storms are inevitable. How the 5% actually win. Now let's flip the script. How do the 5% win while everyone else loses? Here's their playbook. 1. They think long-term. While the 95% chase daily gains, the 5% focus on decades of compounding. 2. They buy when others panic. They see market crashes as discounts, not disasters. 3. They manage risk. Protecting their money comes before multiplying it. 4. They diversify. Not all eggs in one basket. Safety and variety. 5. They keep learning. Every market cycle makes them smarter, not poorer. 6. They control emotions. No panic selling. No hype chasing. Just discipline. And here's the kicker. These aren't secret Wall Street tricks. Anyone can follow them. But most won't, because it requires patience, discipline, and the ability to think differently. Roll life proof. Let's put this into perspective with 2 examples. Take Bitcoin. In 2017, it hit nearly $20,000. Everyone and their cousin was buying. Then it crashed to $3,000. The 95%, they panic sold near the bottom. The 5%, they held or bought more. By 2021, Bitcoin hit $60,000 plus. Guess who got rich? Or take Amazon stock. In the early 2000s, during the dot-com crash, Amazon fell 90%. The 95% abandoned it, saying the internet is dead. But the 5% who understood the business and stayed invested, they turned thousands into millions. This isn't luck. It's mindset. The market has always rewarded those who stay calm while others panic. Anyone can move from the 95% to the 5%, but it requires one thing: discipline. The market doesn't care about your feelings. It doesn't care about your FOMO. It rewards patience. It rewards strategy. And it rewards those who take the time to learn. So here's the takeaway. 95% of investors lose money because they treat investing like gambling. They chase hype, follow the crowd, and let emotions guide their choices. But the 5%, they win by doing the opposite. They stay disciplined. They think long-term. They manage risk. And most importantly, they never stop learning. If you want to join the 5%, start small. Pick a strategy. Stick to it. And remember, the goal isn't quick money. It's lasting wealth. If this video opened your eyes, do me a favor. Hit that like button so YouTube knows to share it with more people.